Hello traders and welcome to another video review. Today is Friday, May 20th, 2022. This is the last day of trading this week, so let's find out what is going on today. Let's check the Forex calendar. National CPI from Japan was the highest, the biggest, the most important event during the overnight session, and as we can see, this CPI has beat the expectations of 1.5% with the number of 2.5% actually, which is better and way bigger than 1.2% from the month of the March. So very big jump in CPI in Japan. Even excluding the fresh food, we got the jump from 0.8 to 2.1%, and with the without the fresh food and the energy, we got a jump from minus 0.7 to 0.8. So big pressure, inflationary pressure in Japan has been seen according to the data. During the London session, one of the most important data are retail sales with and without the auto fuel from the UK. As you can see, retail sales jumped from minus 1.2% to 1.4%, beating the expectations of minus 0.3%. The PPI index from Germany decreased from 4.9% to 2.8%, which means that this producer price index is a little bit lower in the last month. So this is the situation that might spike another wave up in the euro dollar very soon. But before we will go to euro dollar, let's find out what is going on with the Japanese yen. The daily time frame chart of the US dollar to Japanese yen is showing the signs of the weakness. Of course, we've been talking about the multi-divergence here on the daily time frame chart between the price and of course the momentum indicator. Right now at the level of 127.05, we has hit the neutral level on the RSI. So this is the border that will separate the positive momentum from the negative momentum. This is that level 1.27.05, which is the low of the 27th of the April this year. If we break lower, if we break below 127.05, the next target is located at 125, and if we get there, then we got the biggest correction during the up rally. So that correction is a part, in that situation, that correction will be a part of the new cycle down. We might consider this behavior of a double top, and then confirmation, then the bounce, and then another wave to the downside. So if the US dollar to Japanese yen is going down, what is going on with the US dollar index? The US dollar index has hit the 105 level, which we indicated, and then of course we got the reversal or a pullback. Right now we broke below 103.90 and 102.92, so we are heading a little bit lower. 2.25 is the biggest correction right now, and as you can see, we almost hit the level of 50. So I guess that the lows of the beginning of the May, the 5th of the May, located at 102.32 will be of course this border that will separate the bulls from bears. So let's put our technical support here, 102.35, and if we get there, we will have 2.55 minus 2.55 correction. So this is the again the biggest correction during the whole up move, and that means this is the time and price over balance. So we should be ready for a new corrective cycle to the downside. Please notice the fact that right now we are heading way above the main channel, so this is some sort of the acceleration move. Maybe it's even inside of the acceleration channel, however it's not on my chart right now. Nevertheless, it looks like after the period of the very strong up move, now we are cooling off, and the pullback or even a correction is now being developed, right? So please watch 102.35, and then the next target would be 189 level, and of course 99.79, but those levels will be inside the negative sentiment zone, the negative momentum zone. So then the bears will rule the market, will have the control over the market. So it means that the fully blown correction will be developed. Okay, so that was the US dollar index. If the US dollar index is going down, if the US dollar to Japanese yen is going down, again, let's take a look at the euro to the dollar, the most popular forex pair. Daily time frame chart of the euro to the US dollar is showing us again the possibility of a breakout. We've been rejected from the lower channel line once, then we've been rejected twice, but this is a bullish sandwich. This is a bullish sandwich pattern, and the market closed above the lower channel line, which is a good sign for the bulls. We are heading towards the level of 50 on the momentum indicator. Right, so what we now need to do is to break above 1.0639, which is the local technical resistance, and head towards 1.0760, 1.0809. So this is the those are the levels of the technical resistance, but the key technical resistance is still located at 1.0922, 1.0933. If we break above this level, then we might even break out of the channel. However, please notice the fact that this channel is a it's a long-term channel, well established channel. It has almost 1 year exactly we need a 4-5 days more, so the next week of trading, in order to have this channel as a 1-year-old channel. So this is a well-established channel, and any breakout out of this channel might be the beginning of a new upturn to the upside, of course. But if we break above 1.1167, that's definitely the continuation of the uptrend. If we stay below this level, then of course this would be still some sort of the corrective bounce to the upside. However, we need that corrective bounce, we need that correction, we need that pullback to the upside, because for the whole year we've been making lower lows and lower highs, which is the definition of the downtrend. So any violation of this rule would mean that we are either developing the pullback, or we are developing the new uptrend to the upside. So the key level 1.0922, then 1000 basically, and then of course the mother of all technical resistances 1.1167. If we ever get there, it looks like it's going, for now it's going very well for the bulls, at least in terms of the bounce from the extremely oversold market conditions, and to resolve this multi-time frame bullish divergence. And last but not least, we didn't see this one for quite some time, so let's welcome the market of the Ethereum. What is the Ethereum doing? The daily time frame chart of the Ethereum is showing us that after the bounce from the level of 1700, the bulls have a problem with 2151, which is the technical resistance for them, which is why I'm changing the color to the red. And we got this technical resistance. The next one would be 203,000 as well. This is the technical resistance. There you go. So please consider the fact that bulls are having problems with this technical resistance, and as long as we trade below those two levels, there is no chance for this rally to bounce a little bit higher. So consolidations continues on a daily time frame chart into the oversold market conditions, into the negative territory, and the resumption of the downtrend is still possible. So please keep an eye on the Ethereum. We might resume the downtrend quite soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.